The tax season advantage. 5 ways to maximize your refund. Tax season is here, and your biggest financial mistake is letting the IRS keep more of your money than necessary. This is not just about filing forms, it is about strategic wealth defense. We are revealing 5 powerful legal strategies to slash your taxable income, boost your refund, and get you more money back in your pocket. The annual American tax season is often seen as a necessary evil, a time of stress and paperwork. But for the financially savvy, it is actually the most critical period for wealth optimization. Your goal should never be simply to file your taxes. Your goal must be to maximize every legal deduction and credit available to you, turning the process into a strategic win. In this video, we are breaking down 5 essential practical strategies that most tax filers overlook. We will focus on year-end moves and tax time tactics that reduce your current tax burden and set you up for significant savings in the coming year. This is your playbook for ensuring the Internal Revenue Service does not keep a dollar more than they are due. Strategy 1. The Ultimate Retirement Account Tax Shield, 401k and IRA Max Out. This is the single most powerful tool the average American worker has to reduce their taxable income. Contributions to traditional employer-sponsored retirement accounts, such as the 401k, are made with pre-tax dollars. This means every dollar you contribute reduces your adjusted gross income, or AGI, directly lowering your current tax bill. If you have not already maxed out your annual contribution limit for your 401k, which is typically over $20,000 for those under 50, make sure to increase your deferral rate before the year ends. Similarly, traditional IRA contributions are deductible, often up until the April filing deadline. By fully funding these retirement accounts, you are not only saving for your future, you are legally and immediately shifting thousands of dollars out of the IRS's reach. This is the bedrock of tax-advantaged wealth building. Strategy 2. Mastering the Health Savings Account, HSA, Triple Tax Advantage. The Health Savings Account is often called the best-kept secret in the tax code, offering a triple tax advantage unmatched by any other savings vehicle. First, contributions are tax-deductible, reducing your taxable income today, similar to a traditional 401k. Second, the money grows tax-free. Third, if the funds are used for qualified medical expenses, the withdrawals are also tax-free. If you are covered by a high-deductible health plan, or HDHP, maximizing your annual HSA contribution is an immediate financial priority. You can use the funds to pay for healthcare expenses, but the truly wealthy treat the HSA as a supercharged retirement account, investing the funds for tax-free growth until retirement age. This one account offers an exceptional blend of short-term tax savings and long-term compounding growth. Strategy 3. The deduction versus itemization decision. When filing your taxes, you must choose between taking the standard deduction or itemizing your deductions. The standard deduction is a fixed amount that most filers take because it is simple and often larger than the sum of their itemized expenses. However, for many homeowners and high-income earners, itemizing is where the real savings hide. Key itemized deductions include state and local taxes, or SALT, up to a $10,000 limit, mortgage interest paid, and charitable contributions. To win tax season, you must meticulously track and aggregate all your itemizable expenses throughout the year. If the sum of your itemized expenses exceeds the fixed standard deduction, itemizing becomes your legal duty to reduce your tax burden. Strategy 4. Harvesting capital losses and gains, the investment cleanup. Tax loss harvesting is a powerful legal strategy to minimize the tax you pay on investment gains. Here is how it works. If you sold stocks or assets this year and made a profit, a capital gain, you owe tax on that gain. You can strategically sell investments where you have lost money, a capital loss, and use those losses to offset your gains. A $100,000 gain offset by a $20,000 loss means you only pay tax on $80,000. You can even use up to $3,000 of net losses to offset ordinary income, such as your salary. This is a crucial year-end tactic for every active investor. It is about actively managing your portfolio not just for growth, but for maximum tax efficiency. Strategy 5. The self-employment deduction for side hustlers. The gig economy and side hustle generation need to pay close attention to this. If you earned any income through a side hustle, freelance work, or short-term rentals, the tax code allows you to deduct all ordinary and necessary business expenses. This is the golden opportunity to turn everyday spending into a tax write-off. Expenses like a portion of your home internet and phone bill, office supplies, software subscriptions, professional development courses, and mileage driven for business purposes are all fair game. By tracking these expenses meticulously throughout the year and filing a Schedule C with your tax return, you can significantly reduce the taxable income generated by your side hustles, ensuring that the more money you earned stays with you. The key to mastering tax season is year-round preparation. Do not wait until April to gather receipts. Implement these 5 strategies now. Maximize your tax advantage retirement accounts, leverage the triple tax benefit of the HSA, choose itemization wisely, execute tax loss harvesting, and meticulously track all your side hustle expenses. By being proactive, you transform tax season from a dreaded expense into an annual opportunity for wealth growth. If you found this detailed financial analysis helpful and want more strategies to protect and grow your wealth, please leave a like and subscribe to the channel. The goal is always to get you more money. See you next time.